Tax evasion is the illegal evasion of taxes by individuals, corporations, and trusts. Tax evasion often entails taxpayers deliberately misrepresenting the true state of their affairs to the tax authorities to reduce their tax liability, and it includes dishonest tax reporting, such as declaring less income, profits or gains than the amounts actually earned, or overstating deductions. Tax evasion is an activity commonly associated with the informal economy. One measure of the extent of tax evasion is the amount of unreported income, which is the difference between the amount of income that should be reported to the tax authorities and the actual amount reported. In contrast, tax avoidance is the legal use of tax laws to reduce one's tax burden. Both tax evasion and tax avoidance can be viewed as forms of tax non-compliance, as they describe a range of activities that intend to subvert a state's tax system. But such classification of tax avoidance is disputable since avoidance is lawful in self-creating systems. In 1968, Nobel laureate economist Gary Becker first theorized the economics of crime, on the basis of which authors M. G. Allingham and A. Sandmore produced, in 1972, an economic model of tax evasion. This model deals with the evasion of income tax, the main source of tax revenue in developed countries. According to the authors, the level of evasion of income tax depends on the detection probability and the level of punishment provided by law. The literature's theoretical models are elegant in their effort to identify the variables likely to affect non-compliance. Alternative specifications, however, yield conflicting results concerning both the signs and magnitudes of variables believed to affect tax evasion. Empirical work is required to resolve the theoretical ambiguities. Income tax evasion appears to be positively influenced by the tax rate, the unemployment rate, the level of income and dissatisfaction with government. The U.S. Tax Reform Act of 1986 appears to have reduced tax evasion in the United States. In a 2017 study, Alstad-Zeta et al. Concluded based on random stratified audits and leaked data that occurrence of tax evasion rises sharply as amount of wealth rises, and that the very richest are about 10 times more likely than average people to engage in tax evasion. Customs duties are an important source of revenue in developing countries. Importers attempt to evade customs duty by under-invoicing and misdeclaration of quantity and product description. When there is ad valorem import duty, the tax base can be reduced through under-invoicing. Misdeclaration of quantity is more relevant for products with specific duty. Production description is changed to match AHS code commensurate with a lower rate of duty. Smuggling is import or export of products by illegal means. Smuggling is resorted to for total evasion of customs duties, as well as for the import and export of contraband. Smugglers do not pay duty since the transport is covered, so no customs declaration is made. During the second half of the 20th century, value-added tax emerged as a modern form of consumption tax throughout the world. With the notable exception of the United States, producers who collect VAT from consumers may evade tax by underreporting the amount of sales. The U.S. has no broad-based consumption tax at the federal level, and no state currently collects VAT. The overwhelming majority of states instead collect sales taxes. Canada uses both a VAT at the federal level and sales taxes at the provincial level. Some provinces have a single tax combining both forms in addition. Most jurisdictions which levy a VAT or sales tax also legally require their residents to report and pay the tax on items purchased in another jurisdiction. This means that consumers who purchase something in a lower taxed or untaxed jurisdiction with a intention of avoiding VAT or sales tax in their home jurisdiction are technically breaking the law. In most cases, this is especially prevalent in federal countries like the US and Canada, where subnational jurisdictions charge varying rates of VAT or sales tax. In liberal democracies, a fundamental problem with inhibiting evasion of local sales taxes is that liberal democracies, by their very nature, have few border controls between their internal jurisdictions. Therefore, it is not generally cost-effective to enforce tax collection on low-value goods carried in private vehicles from one jurisdiction to another with a different tax rate. However, subnational governments will normally seek to collect sales tax on high-value items such as cars. Dennis Kozlowski is a particularly notable figure for his alleged evasion of sales tax. What started as an investigation into Kozlowski's failure to declare art purchases for the purpose of evading New York State sales taxes eventually led to Kozlowski's conviction and incarceration on more serious charges related to the misappropriation of funds during his T.E.